Welcome back to Alpha Recap, your end-of-day market wrap from stockalpha.ai. Markets closed up today and we had some pretty concentrated flows to talk through. As always, if you have questions, you can reach us at stockalpha.ai. Ready to dive in?
Absolutely. Big day. Lots of conviction trades. We saw a rotation into AI and chips, a pop in silver, and defense names getting a boost. Plenty to unpack.
Let's start with the silver move because that stood out. The iShares Silver Trust jumped about 3.26% and finished around $101.55 on roughly 210 million shares. That was outsized volume, not your run-of-the-mill pop.
Right. When a commodity ETF trades with that much volume, it usually tells you it's not just retail noise. People were either buying silver as an inflation or geopolitical hedge, or it was part of a broader rotation into real assets. Either way, volume was the story.
Some will say it was speculative, others will call it hedging. I think it's both. In a market where tech is rallying, some players still wanted a safety layer. Silver can play that role.
Totally. And speaking of tech, chips led the gains in semiconductors today. Intel climbed about 3.4% to roughly $43.93 on about 115 million shares, and NVDA finished up about 1.1% at about $188.52 on about 138 million shares.
Those are heavy trading days. When big names in semiconductors move on elevated volume, it usually signals institutional or algorithmic participation. That reinforced the narrative that AI spending is still a structural tailwind.
Exactly. Higher volume around those names suggests more than just headline chasing. It implies real positioning for AI infrastructure. If funds are reallocating into semiconductors, it's usually because they expect sustained demand for chips.
And then we had Lockheed Martin hitting a fresh 52-week high at about $596.23. Defense equities got a lift, whether that was contract expectations, budget clarity, or simply a flight to safety rotation within equities.
Defense often does well when geopolitical noise or budget certainty shows up. Investors view these names as quasi-defensive with inflation pass-through and government-backed revenues, so they can act as both growth protectors and yield proxies in a tricky macro setup.
So tie that all together. We had money rotating into growth-forward areas like AI and semiconductors, while also moving into real assets like silver and into defense. It wasn't an either-or, it was layered risk on with hedges.
That's the takeaway. Investors were balancing. You didn't see a pure speculative rush. You saw selective conviction, buys across a few themes.
Quick corporate and analyst hits. PACCAR had a price target lift to $138 from Bernstein, citing margin recovery. Analyst upgrades like that matter when they reflect improving fundamentals, not just momentum.
Margin recovery in truck makers is a believable call if freight demand normalizes and pricing power returns. For investors, that means watching upcoming earnings for margin commentary and free cash flow progress. If management delivers, you get dividends or buybacks.
Couple of small but interesting notes. Horizon Kinetics bought a single share of Texas Pacific Land at $339. It's not market moving, but named manager buys like that can be a signal worth watching in subsequent filings.
One share doesn't move the tape, but it's a visible vote of confidence. If you see follow-on purchases, or it shows up in a larger 13F filing, then sentiment can shift.
Also, BRC Group Holdings restored compliance with Nasdaq's periodic filing rule that removes a regulatory overhang. It doesn't suddenly change fundamentals, but it takes headline risk off the table.
Exactly. Compliance restorations reduce the noise. What matters next is consistent reporting. If they keep up timely filings, that overhang should stay buried.
Switching gears to longer-term structural themes, HTX Ventures put out an annual review framing 2025 as a pivot toward mainstream adoption for crypto. They highlighted regulatory clarity, tokenization, and institutional uptake.
Put simply, tokenization is turning assets into digital tokens on a blockchain, and custody is about safely holding those tokens for big institutions. If regulators stay constructive, more institutional demand could flow into regulated crypto products. Think custody services and tokenized ETFs.
So institutionalization across asset classes is a through line, from tokenized assets to ETFs to custody solutions. That supports a whole ecosystem of fintech and compliance services.
And in healthcare, we saw two moves that fit the specialization and productivity theme. Galen Hope launched a physician-led adolescent residential program in Miami focused on mental health and eating disorders. And TRC Healthcare introduced pharmacy workforce solutions targeted at health systems and enterprise pharmacies.
Those are examples of providers both expanding specialty services and selling technology or services to improve operations. For investors, that's two ways to make money: revenue growth from specialized clinics and margin improvement from productivity tools.
Right? Watch for contract wins, utilization data, and reimbursement traction. That's what will turn an interesting pilot into a scalable business story.
Let's run through the emerging patterns from today. 1. High-volume conviction buys were concentrated in semiconductors, silver, and defense. 2. Rotation wasn't binary. Growth and hard assets moved together. 3. Institutionalization and regulatory clarity kept showing up in crypto and custody narratives. 4. Healthcare continues to fragment into specialty and tech-enabled revenue streams.
And for traders and portfolio folks, quick guidance. Momentum traders should watch volume confirmation for the chip names and whether silver holds above today's pivot. Thematic investors owning AI exposure got reinforcement of the secular case, but it's a good moment to rebalance on valuation or catalysts. Defensive-minded investors could consider pairing selective commodity exposure with defense equities.
Event-driven investors should keep their eyes on PACCAR's earnings for margin confirmation, any contract news for Lockheed Martin that could extend its run, and regulatory headlines that test the HTX narrative for crypto adoption.
Tomorrow's checklist. See if silver held its gains or retraced. Check whether Intel and NVDA sustained their momentum. And watch macro crosswinds. The dollar and treasury yields could pressure commodities or help them depending on direction.
All right, time for the bottom line takeaways. 1. Today was a liquidity-driven day with concentrated bets, big volume in silver and semiconductors, and a fresh high for defense. 2. The tape showed a layered risk-on posture, not an all-in speculative rush. 3. Institutional and regulatory themes in crypto and healthcare continue to create longer-term structural opportunities. And 4. Watch tomorrow's volume and macro signals to see if this rotation sticks.
That sums it up nicely. If you're planning trades, use volume as your confirmation and keep stops reasonably tight on fast moves. For investors, focus on fundamentals. Margins, contract wins, and regulatory clarity will matter more than daily headlines.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. We'll be back after the next close. Same place, same time.